Welcome back to Financial Works, where we're progressing through the levels of financial success. In this series, we'll guide you through the 7 levels of financial freedom, from getting out of debt to building wealth and beyond. Each level builds on the last, bringing you closer to your financial goals. In today's video, we're diving into Level 2, building your financial safety net. This level is all about creating an emergency fund, which is a game changer on your financial journey. Having an emergency fund provides peace of mind and protection against financial shocks. It also helps you avoid going into debt or dipping into your long-term savings when life throws you a curveball. Let's get started and learn how to build your financial safety net. An emergency fund is a stash of money that you set aside for unexpected expenses, such as medical bills, car repairs, or job loss. These are expenses that you can't predict or plan for, but that can have a significant impact on your financial situation. An emergency fund is not meant for regular or discretionary spending, such as groceries, rent, or entertainment. Having an emergency fund can help you weather these financial storms without derailing your long-term goals. It can also reduce your stress and anxiety, knowing that you have a cushion to fall back on. The benefits of having an emergency fund are numerous. It can improve your financial security, confidence, and peace of mind. It can also give you more flexibility and freedom to make choices that align with your values and aspirations. For example, you may be able to quit a job that you hate, start a business that you love, or pursue a passion project that you've always wanted to do. Let's get practical. How much should you have in your emergency fund? The amount of money you need in your emergency fund depends on your personal situation and preferences. There is no one-size-fits-all formula, but there are some general guidelines that can help you determine your ideal number. The most common rule of thumb is to have enough money to cover 3 to 6 months of your essential living expenses. Your essential living expenses are the things that you need to survive and function, such as food, housing, utilities, transportation, insurance, and debt payments. You can calculate this by adding up your monthly bills and expenses, and multiplying it by the number of months you want to cover. For example, if your monthly expenses are $2,000 and you want to have a 6-month emergency fund, you'll need $12,000 in your fund. However, this rule of thumb may not work for everyone. You may need more or less money in your emergency fund depending on your circumstances. Some factors that can affect your emergency fund size are job stability, lifestyle, and risk tolerance. You should choose a number that makes you feel comfortable and confident, and that aligns with your financial goals and values. Now that you've got an emergency fund, where should you keep it? There are several options for where to keep your emergency fund, each with its own advantages and disadvantages. Some of the most common ones are a traditional savings account, which is the simplest and most accessible option. You can open a savings account at your bank or credit union, and deposit your money there. The benefits are easy access and FDIC or NCUA protection. The drawback is low interest rate. Another type of savings account that offers a higher interest rate than a traditional savings account is the high-yield savings account. You can find these accounts at online banks or fintech companies. The benefits are higher interest rate and FDIC or NCUA protection. The drawbacks are less access and possible fees or limits. Money market accounts combine the features of a savings account and a checking account. You can open a money market account at your bank, credit union, or online provider. The benefits are higher interest rate, FDIC or NCUA protection, and convenient access. The drawbacks are possible fees, minimum balances, or withdrawal limits. You should compare the different options based on their interest rates, fees, accessibility, and security. You should also diversify your emergency fund across different accounts, to reduce the risk of losing your money or being unable to access it. Building your emergency fund is an ongoing process. One of the best ways to build your emergency fund is to make saving a habit. You can do this by automating your savings, setting a monthly goal, and tracking your progress. This way, you can save money without thinking about it. Set your monthly savings goal based on your income and expenses, and use a budgeting app or spreadsheet to track everything. You can use a chart, a journal, or a reward system to motivate yourself. Another way to build your emergency fund is to find ways to earn extra money, such as taking on a side hustle, selling your unwanted items, or asking for a raise. You can also look for ways to save money, such as cutting your expenses, using coupons, or negotiating your bills. You should dedicate any extra money you make or save to your emergency fund, until you reach your target amount. Let's bring it all together with real-life scenarios and examples. One of the most common scenarios where an emergency fund can come in handy is job loss. Losing your income can be a devastating blow to your finances, especially if you don't have another source of income or savings. Without an emergency fund, you may have to rely on credit cards, loans, or family and friends to cover your living expenses. This can lead to high-interest debt, damaged credit, and strained relationships. With an emergency fund, you can have a cushion to cover your essential expenses until you find a new job. You can also have more time and flexibility to look for a job that suits your skills and interests, rather than settling for the first one that comes along. Another common scenario where an emergency fund can be useful is medical emergency. Whether it's an accident, an illness, or a pandemic, a medical emergency can have a huge impact on your health and your wallet. Even if you have health insurance, you may still have to pay for deductibles, co-pays, prescriptions, or out-of-network services. Without an emergency fund, you may have to sacrifice your other financial goals, such as saving for retirement, education, or a home, to pay for your medical bills. With an emergency fund, you can have the funds to cover your medical expenses without compromising your future plans. By having a well-funded emergency fund, you can handle life's surprises with ease and grace. You can also protect your financial security, confidence, and peace of mind. You did it! You've completed Level 2 of Financial Works. By building your financial safety net, you've taken a significant step towards financial resilience and success. You've learned how to create and manage your own emergency fund, which is a game changer on your financial journey. We hope you enjoyed this video and found it helpful. If you did, please give it a thumbs up, leave a comment, and share it with your friends. And don't forget to subscribe to our channel for more videos like this. Join us in the next video as we explore Level 3. Remember, each level builds on the last, bringing you closer to your financial goals. See you in the next level.